What's up guys, welcome back to InvestingPH. Today we are going to evaluate again another food company. It made its IPO debut this year. I think a lot of Filipinos have already tried their products, especially their noodles. This is Monde Nissin. Let's see how it does in my checklist and hopefully we will find out if it's a good investment or not. So let's start. Again, just a reminder, do not base your investing decisions based on what I say. These are all for educational purposes only, and I am merely citing my own opinion. And before we start, I would really appreciate it if you kindly click the like button, and come on, if you haven't yet subscribed to my channel, now is the day you click that subscribe button. Now, who is Monde Nissin? It was incorporated and registered with the Philippine Securities and Exchange Commission on May 23, 1979. Monde Nissin Corporation is a global food and beverages company headquartered in the Philippines, with a portfolio of iconic and market-leading brands across fast-growing categories, including instant noodles, biscuits, baked goods, culinary aids, and alternative meat products. Monde Nissin's portfolio comprises its Asia-Pacific branded food and beverage business and meat alternative business. The APAC BFB business consists of 3 products: instant noodles, biscuits, and other products such as beverages, baked goods, and culinary aids. Their meat alternative business sells its product globally under Corn Foods and the Corn brand. Now let's have a quick overview of their different brands. Now I think a lot of you are familiar with their brands, but anyway, let's dive deeper into it. First, their Asia-Pacific branded food and beverage business, or APAC. First, their products here holds a large percentage of market shares. From their noodles, holds 69.9% of the market. Yogurt drinks now went up to 81.4%, though their cultured milk, which is Delight, declined from a share of 27.1% to 20.3% this second quarter of 2021. But still, most of their products have increased market share percentage, which is a good sign. The more percentage their products in the market, a better sign that a lot of people are buying more of their products. Good to take note on. Now here's how they are doing financially this first half of 2021. Their sales slightly went up even in the midst of the pandemic, a good sign, although their net income went down. Now this can be because of a lot of factors, like commodity prices going up as shown here. Both wheat and palm oil drastically went up. By the way, all of these data you can find in their company website, in their first half financial report. You can check it out guys, well presented. So for their new product developments, they will launch some new products and relaunch their pancit canton thinner noodles. Now let's go to their meat alternatives. Now for this one, their sales slightly went down and as well as their net income for the first half of 2021 compared to last year. Now their brand, Corn Foods, has now 30% of market share in the UK, though it went down from 36% last year. By the way, if you aren't familiar with Tesco, they are a multinational British groceries and is the 3rd largest retailer in the world. Now Corn guys is one of the top meat alternative brands in the world. That's right, in the world guys. Right now, meat alternatives are getting popular and a lot of restaurants have already started adapting it. Going to that, KFC has adapted it and there are new products being developed. One also in the name of Tesco, which is the retail company I mentioned a while ago. This is really one thing to take note on, now that more and more companies and restaurants are now introducing meat alternatives in the market. Right now, meat alternatives are in the pre-trial for other countries, while in the UK, France, and Canada, they are already in the product expansion stage, and Europe has already launched, and Malaysia and Singapore will soon follow. Another thing to take note on, more market for them, and with that, more income stream for the company. So this is their forecast for their capital expenditures. They are really putting more in the meat alternatives, which is a really good sign. Now there are a lot of videos here in YouTube about meat alternatives, plant-based meat. I suggest you watch it in order for you to understand the benefits of this one. It's not only for our health, but also for the environment. So with that, let's go to their financials. Now, I would still be following our checklist in evaluating their company, and I would compare it to its competitor here in our country, which is URC. By the way, if you want to watch my analysis of URC, link in the description below. And since Monde is just a new IPO company, we only have 3 years worth of data for them. So I will be including their last 12 months for us to see more their growth, so it's kinda 3.5 years worth of data. Now I wouldn't compare it to their competitors in the meat alternative side, since like for example, Beyond Meat only sells plant-based products. So it's not a fair comparison since Monde still has a majority of their sales coming from their other products. So URC I think is the best one to compare it with. Moving on, let's go to their income statement first. So from 2018 to 2020, it's a positive growth for them in the revenue and net income. Now again guys, although it's a new IPO company, it's not a new company, okay? Monde Nissin has been around for 40 years, so it's already a mature company. Moving on to their revenue. Now for their revenue growth, they had a positive growth but only 3% growth in 2019 and 2020. And for the first half of 2021, they have already grown 0.59%. So let's see if this goes up even more in the end of the year. Going on to their net income. This one tells us a different story. Really grown so high, especially in 2019. Although their revenue only has 3% growth in each year, their net income went up like this. Now this is because their net income margin growth went up quite a bit. We can see that in 2019 and 2020. As for the latest 12 months, let's see if this improves later on this year. Their compounded annual growth for 3 years is at 53.24%, really high. Now, I didn't include yet their latest 12 months in their compounded average, since the year isn't finished yet. I just wanted to show you guys how they are doing this first half of 2021, and to give us more clue how they are growing, since for me, 3 years of data is really not enough to judge a company. So for this one, even in the pandemic, their net income still went up quite high. So for this 3 years worth of data is a check for me. Moving on to their balance sheet. Now their equity growth in 2019 had a tiny negative growth, and in their latest 12 months, it really went up huge, a 145.20% growth, really high. Their current assets for this year really skyrocketed up. Well, not surprising since this year was their IPO debut. So for me, this is a check. Their growth is really high. Next, their ROE. So since we only have 3 years worth of data, we will only be using a 3-year average. With that, their 3-year average is 20.5%, so quite high. And looking at their competitor, URC, their 5-year ROE average sits at 14.1%. So again, don't look at ratios blindly. Always confirm if their ROE isn't reliance in too much debt, since there are 2 factors that can raise up ROE. Higher net income or lower equity, which gets low if there's a huge amount of debt. So we go to their debt to equity. Their debt to equity in 2020 sits at 2.18, so slightly above what we want. Now this isn't too much of a deal since we can see their net income also increase in 2020. And if you look at their latest 12 months, their debt to equity ratio is only 0.83, so really low. If we compare to their competitor, URC also has a low debt to equity which is 0.80. Next, their free cash flow. This again computed by cash from operations minus capital expenditure. With this, we can see Monde Nissin's FCF decreased quite a bit in 2020 and also in their LTM. Again, this is the only problem with seeing only a few years. Don't know what's really going on. Anyway, this is a check for me, even though 2020 is a negative growth, because seeing as though 2019 had a really high growth and 2020 only fell down a little bit after a sudden spike like that, and it's still high. And if you compare their FCF to their net income, they have an FCF to net income ratio of 1.04, and in their latest 12 months, their FCF to net income ratio is at 2.52, really high. Next, let's see if they can pay up their long-term debt in just under 3 years using their free cash on hand. So we divide their long-term debt using their FCF. Now I will be using their latest 12-month long-term debt and FCF. With that, we get 3.41. So not bad, although higher than what we want. This is one thing to take note on. They can pay their long-term debt in just under 3.41 years. But it's still an X in my list, since what I want is less than 3 years. In 2019 and 2020, the ratio here is playing at around 3.4 to 3.6, so really great. Comparing to URC, in 2020, they only have 1.73. Next, let's look at their current ratio. Now this tells us if they are handling their short-term obligations well or their short-term debt. With this, they have a current ratio of 1.94. For their latest 12 months, this means they have 1.94 peso of current assets for every 1 peso of current liabilities. So a check for us. For URC, they have 1.22. Next, let's look at their PE ratio. So they have a PE ratio of 32.10, quite high. This means you are paying 32.10 peso to earn 1 peso, an X for me. But anyway, you should always think if this company will grow more in the future, that if it's still worth buying at this high of a PE. So you should look back on all the previous valuation you did to come up with the conclusion for that. Now I would skip the dividend part since this company still doesn't have a record for their dividends. Next, does the company have a moat? So like URC, Monde's products is widely known in the Philippines. A lot of us have been eating their food ever since we were young. And another thing that strengthened their brand is their development in their alternative meat section, which is now getting popular worldwide. That's really a big addition for them. Although we only have 3 years for their financials, they are growing in their net income equity, and FCF quite well, and they are handling their short-term and long-term debt well. Although it failed in the long-term debt valuation, it's just by a thin margin. So for a competitive advantage, this is a big check for me. Next is their leader. Now their founder and president is Betty T. Ang. Now there's not much data of her since she's quite mysterious, but one thing Forbes knows about her, she has been in the richest person in our country for a long time. Now for their CEO, Henry Sosenato, he also handles a lot of company, same as with their chairman of the board, Hartono Quifanus. Now there's not much data about them in Google, but what we can see is how the company has grown not only locally but also international. Although we only have 3.5 years of data for this proof, this is still a check. The company has been here for a very long time, more than 40 years, and is still evolving. Lastly, is it within my buy below price? My computed intrinsic value for them is 25.28 with a 30% margin of safety, having a buy below price of 17.69. Now, since we only have 3.5 years worth of data, I can only base their growth projections in that 3 years, although I use a much conservative growth for this one because if I base on those massive growths, my computation would really be so high. Anyway, this is just my own projections. Still, compute your own intrinsic value. This is my own opinion only. With that, Monde scored 9 out of 11, only failing in the long-term debt by just a short margin and for the PE ratio, although this is only for their 3 years worth of data. So this is the only problem if you only have a few years. You don't know how well they are growing in the long run, you just have a clue of how they are doing in that few years. Because sometimes companies have sudden bursts of growth, but if you look at a wider span of time, it tells you something different. Although we don't know that for Monde, but as I see it, they have a really good competitive advantage and they are still improving their company with new products being made. So again, just a reminder, please still do your own research for the company. Don't just listen to what I say. With that, I hope you liked the video. If I miss out on some information, please do share it for us in the comment section. And if you have gone this far in the video and still haven't clicked that like button, I really suggest you click it now. And if you aren't subscribed yet, also click that subscribe button as well. So thank you and see you in the next video.